Mm. It's just good things. Oh. No? Yes. Cool. Yes, yes. Can you call me some other time, please? How's it, guys? How you guys doing? Trust you guys are all well. Well, um, well, afternoon, guys. I trust you guys are all good. Let's just say I'm hoping you guys can see my screen right now. If you can see a screen, Sam, you just go to the chat box and um, just type I'm in. Okay, just type I'm in. If you can see my screen and hear what I'm saying, please type I am in. Okay. Okay, that's good. That's good. That's good. Nazor. That's good. Happy days. Uh, happy days. Happy days. All right. Let us go. Let us go. Okay. Guys, if you've got any question regarding any topic, please type on the chat box, and we're gonna go in sections. Okay. The way we're gonna run this session, we're gonna go in So the first thing I want to get you guys through is understanding exactly what is Forex and why we trade it. Because I've learned over the years that a lot of people, they say they are traders, but sometimes you find that they don't really understand what they are trading. Okay. So the first thing you must understand is that as a trader, what you are trading, resume share. Okay, let's go. Sharing now. Oh, it is happening. It's almost. Okay, let's see that. Okay. Why is this? Okay. Just gonna share this. Share screen. Should be seeing my shot. Okay, can you guys see my? Can you start seeing my screen? Okay. What I want to discuss is that a lot of people don't understand what they are trading. First of all, a lot of people when they come to Forex, obviously they are trading currencies. So currencies is it's just you trading. These are the currencies we are trading. So currencies are mostly controlled by I can say the Reserve Bank, because those are the main institutes that actually control the interest rates, and obviously it's by different countries. So these are the currencies that we trade. Is the dollar versus the yen. This is the dollar versus the Swiss franc. So what happened is, as traders, we trade the exchange rates. Okay, so these exchange rates of what euro versus the United States dollar. So we know if the price drop, we make money. If the price actually goes up, if you are selling here, obviously you're gonna make money when the price actually dropped. Okay, so if you sell here, you make money. That we know. Okay, that we know. Okay, and obviously if we buy at the lowest point, we know we're gonna make money. Okay, that is just basic understanding of trading. Okay, and then obviously you have to know your other instrument. Okay, that is just basic currencies. Another instrument that you can trade if you're trading Forex, obviously it's your, let's say, indices. Okay, these are your indices, SP 500s. That is SP 500s. As you can see, the SP 500 from this time has been basically going up. It's basically been going up. So yep, it's been basically been going up. So what that means is that if you bought, can you see here, there was a huge crash, and then obviously it's been like okay, meet meet all. So you've got few guys that are still joining in. Okay, so there's some few guys that are joining in. Okay, I'm not sure if we should be waiting for them or what. Okay, okay, let's see on the chat. Okay, all right, so let's go. Let's go again. Okay, so this has been what I call the indices. This is SP 500. Remember, an indice number one is different because it's based on the country. Okay, so it's different countries and countries mostly, and then obviously it's different sectors. Okay, sometimes they measure in terms of the market cap company. How big are those companies, how small those companies, okay? So the sectors are important, the country is important. For example, the SP 500 is the top 500 US companies, and the NASDAQ obviously is the top 100 tech companies, which means companies that deal with technology, like your Tesla, like your Amazon, like your Facebook, like your all these tech companies, even companies from China, like Alibaba, all those companies are listed on the NASDAQ. They are there on the NASDAQ indices. So it's basically by looking at the NASDAQ, the performance of the NASDAQ, these are top tech companies. These are the top tech companies. They're the top hundreds. It's a mixture between the China and the US. So it's top tech. This is basically a mixture between the US and China. Okay, so obviously we trade this as traders, which is, and this is one of the best paying indices. And obviously we trade the German DAX, same story. It's industry, it's Germany based, European companies, the best steady companies in there. And obviously this is Canada, this is Nikkei. And last of all, another thing we trade, guys, is crude oil. We trade the oil for the reason because whenever there's a demand of oil, obviously we know the price is gonna go up whenever there's a huge supply of oil. As you guys notice in the last couple of weeks, you notice that the oil dropped big here in April. Why there was this drop is because of the lockdown. So the lockdown, what happened is with the lockdown, guys, is that we had a lockdown. So it's a huge supply of oil. So what happened with the huge supply? It had to, okay, it had to drop. As you guys can see here, that was a huge drop of oil. Okay, huge drop because here a lot of countries went to lockdown. With the lockdown in place, meaning there's no movements, there's no need of oil, there's no manufacturing. A lot of things are basically in the lockdown. So you what do you get with that? You get a huge supply of oil, and then hence the price dropped for oil. And then obviously with this happening now, you will have this investment, which is gold, moving up with people not being sure what's going to happen with the market and other instruments. So you had gold winning with that. Okay, you had gold winning. And then obviously let's go over to what we need to deal with today. Okay, let's deal with what we need to do with today. Okay, the what I wanted to ask you guys to go through today is it's a process. Okay, it's a process that we use to trade. The process that we use to trade, if you can see it, let me show you the slides. I think it's this one. Okay, let me show you the slides. Okay, it's a process that we need to understand as traders. So in simple nutshell, okay, so that's the process, guys. Remember, if you have any question regarding anything, please ask questions. Please do ask questions. Please do ask questions. Okay. Please do ask questions. All right. So obviously the first thing you should understand with this now is if you are trading, these are the steps that I want to is understand firstly the trend, understand the candlestick patterns, understand what is meant by support and resistance. Obviously, you have to master the basics, okay? When we talk about understanding the trend, what we mean is you have to understand that there's a downtrend, there's an uptrend, there's a rally, which is an uptrend basically, and then the sideways base where the market is like moving sideways. Okay, these are the major trend. The major trend, what you see is, for example, let's go here. Let's go here. This is the screen. Okay. Let's say you want to trade. Okay. I always say the first thing obviously you have to do is firstly you need to go in and check what I call is the economic calendar. Okay. Economic calendar is where you're gonna see your a screenshot one for tomorrow. So this is the economic calendar. It's here. Okay. As you can see, the first thing I need to check, I want to check if tomorrow or it's a normal trading day. So what I do, I go to investing.com, and then after going there, I'll have to check if it's a normal trading day. Okay. So as you can see, Monday, 25th of May, there's a holiday in the US, it's UK, it's Singapore, it's India. Okay. There's also a release of German GDP. There's also a 10 o'clock. There's also German info climates at 10 a.m. The another one is 8 a.m. So I understand because here there's like three bulls, as you guys can see here. These three bulls here, these three bulls, okay? These three bulls here. I think I'm marking. Can you just use that? Okay, let's see. These three bulls and then these three bulls, which means it's highly volatility after those data or economic data has been released. It's going to affect that currency huge, okay? And also as at the time is at 8 o'clock, and the currency obviously is the euro. It's the euro, okay? That's the first thing that I check. Is it a normal trading day? And then obviously you go to your charts. Okay, when you go to your charts, what are you looking for? You're looking for, firstly, is a direction. Okay, direction meaning you want to see where the market is going. So the direction, where do you use to check your direction? You use what I call higher time frame. Okay, higher time frame is for direction. Higher time frame is for a direction. Okay, you look for a direction where the market is going, because you don't want to be buying in the when there's a huge supply, or there is the market is gonna be dropping. So obviously the lower time frame, what do you check there? The lower time frame is, you look for entry point. Okay, like I've been saying, guys, with trading, you can trade anything once you understand the strategy. When you understand the strategy, lower time frame, you're looking for entry point. Remember, as traders, we can make money whether the currency is going up or whether the currency is going down. Okay, note this in your notebook. Higher time frame. Higher time frame is for what? Higher time frame is for direction, and lower time frame is for entry point. Okay. So what you need to do now, once you've noted that, you need to do what I call a top-down analysis. Top-down analysis, it's top-down analysis. It's from, you can start from, let's say start from weekly to let's say M15. Okay, we can start from daily. It's up to you. Okay, it's up to you, from weekly up to M15. Okay, so this is what? Gold. Okay, this is what I call top-down analysis. Okay, so firstly, identify the trend. As you can see, this market has obviously been moving up as gold is gaining value over time, obviously. But then let's just use a random currency. Okay, let's just use a random currency. Let's check, is there anyone in the chat box? Okay, no question as yet. Seems like everyone is good. Okay, this top-down higher time frame is for direction, lower time frame is for the entry point. Okay, let's just take one of the trade B. Let's go to the daily charts so we can check it out. Okay, this is the daily charts. As you guys can see, this is gold. What's happening here? Why am I keep getting new invites? Why am I getting new invites? Okay, let's go. So this is gold, right? I think we've shared this analysis before, that gold actually went to this area here. Okay, as a trader, like I keep saying, like for instance here, the market was going up, right? This is what I call uptrend. Okay, and then when the market came here, it created what I call, this here is what I call the base. Okay, so this was, okay, 2 people in the waiting room. Let's just admit them all. Okay, so what is happening here? You got this here market going up, so we call that what? A rally. Okay, so it's a rally, or we call it let's say uptrend. Okay, but it's not the same thing, it's just an uptrend, so you can understand it. So this is a rally, the market is going up, and then once it went to that level, obviously, then it created a base. Okay, from that base is what most people say it's moving sideways, but remember, the market doesn't necessarily move sideways, but it does move up and down. Okay, so this is what I call, people say it's sideways. Okay, so this is the base. From the base, the market just reversed. Okay, reverse. So when the market comes to the base, it can do 2 things. Okay, when the market arrives at the base, let's say this is a base. Let's say the market is coming to this area. Let's just draw a rectangle here. let's say this is a base, okay? The market can come to the base like this, and from the base, and then what? Reverse, okay? Come back, come to the base, then drop. Or if the momentum is strong, it can just do this break above it. Obviously, if you miss this move going above it, obviously you have to catch the retest, because we're gonna retest, okay? So this here is what happens. The market came to the base, and then this was a base, obviously, and then the market moved above, and then obviously, so this here is a break, and then obviously that is a retest, okay? That's a retest. So that's what happens. Most people, we call that, it can be a swap zone, or it can be a flip. So a flip, like a where support becomes resistance, or when demand, where supply becomes demand, or demand becomes supply. So in this case, you look for a retest. So you enter where? At the retest. Okay. You enter the retest. Here again, you're gonna enter here. Okay, let's go for this one for gold. Seems like we have new people that are still coming through for the, okay, still coming through for the session. Okay, and then it's a retest. Okay, so in this case, like I was saying, as you guys can see here, whoa, as you guys can see here, this here was what? This is going up, and then from the base, so this here is a base. Then from the base, what happened? The market up, okay? There was this drop. So this is a base, and this was what? A rally, okay? So this is what I call a rally. So imakethe inomkhuba of it just leaving close. Who is that? Who is that? Who is that? Who is that? Okay. All right. Let's go. So and then the base, and then obviously then there is a drop there. Okay, and then there was this drop here. Okay. This drop. Okay. So at rally base. Okay. Who is making that noise? Ubanilo. 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 Okay. Are you guys still with me? Or are you guys maybe lost somewhere? Okay, there's a drop. So remember what the market intenza imarket ishiya ama-clues yabo. Into engivele ngayenza ngivele ngasebenzisa i-black and white screen ishiya ama-clues yabo. Yabo le khandlela leli nje idropha kanje imarket, idropha kanje. Lama-clues lawa yabo, le i-clue yokuqala le kusinali imarket kade libe likhuphukela, then suddenly kwafambeka ikhandlela enje out of nowhere yabo, le khandlela leli, this candle out of nowhere kwafambeka leli khandlela. Okay, and then analinye ikhandlela elibonakalayo nayo into eyenzakalayo ubona la lento la, it doesn't just happen by randomly, it's created because the market could respond to this thing. Okay, so obviously this drop, there was accumulation there of certain orders, then there was a huge drop. When there's a huge drop, the market is likely ukuthi iphinde ibuyele back to that point again, like ibuyelile laphana, and then bese njani bese yadrop yabo. Ebobuya kanje uyabona isibuya ngani, momentum engekho that much big. Okay, engekho. Can you guys hear me? Are you guys good? Let's check.
Yes, yes.
Some questions.
We can.
Yeah, I want to take some questions from you guys. Okay, maybe of any pair that we can analyze. Okay, so charts. Okay. Oh, okay. Please explain the second clue. Okay, cool. Let's go. Okay. Okay. So this is the first clue. Okay, because this here is what I call what do you call this scam? It's I forgot the name. Okay, it's okay, because it break here in between. So I'm gonna show you this clue over and over. We're gonna see this clue. Okay, over and over. I'm gonna show it to you. I forgot the name, but it's Okjela. I will tell you just now. Okay. Every time the market break a certain, whenever a market break like a support level or resistance level, it's gonna do that thing. It's called the flag limit. Yeah, I remember now. It's a flag limit. The name of it is called the flag limit. You'll see it over and over. So it's a flag limit. So that's another clue from up base, né? So it's a flag limit. Flag limit. Okay. Flag limit. Okay. Right. Okay. Okay. Let me just remove everything so it's gonna be clear. Okay. So what is happening here is that from the higher time frame, you can see there's a huge drop, obviously. And then what you do is now you remove everything. Then you can see this compression. The compression is moving towards what? The next, this base here can be called a supply. Supply meaning there's a lot of that instrument available. There's a huge supply. So if there's a huge supply, obviously a lot of sellers. So a lot of sellers. So supply is where we look for what I call the sell zone. Okay. So what do you do as traders, like we've been saying over and over again? Once you've done your analysis, you take care. Okay, let me just remove that so you guys can see clear what I'm talking about. Once you've done all this analysis, okay, you've checked that this is obviously compression. It's gonna drop, okay? So you can see it's gonna drop. This is the last point from this candle. So you take that horizontal line, you copy the parameters, you copy this, okay? That you use that for what? For your entry, you go to a new order because it's gonna drop. You use that in your sell limit, your pending order, okay? In your pending order, it's gonna be a sell limit. So that's your entry price, okay? Your stop loss must be above your zone, okay? That's why I'm saying your entry point is important. So your stop loss is going to be there, but then obviously your take profits is going to be at the end of that candle. What does this candle end? As you guys can see, from here to there is 1727. If you can see that signal that was sent to the group, it was that the take profits, this was a take profits, okay? As you can see, you take that, you copy, you take that to your take profits, and then you take that, then you copy. That's going to be your stop loss, okay? You enter there, stop loss, okay? And then you click place, okay? That's all you do. So you use this point here. Let me just remove all these lines so you can see my entries as I've mentioned. Okay. Okay, guys. So this is my entry. I'll send you another code in a few minutes, guys. Okay, so this is my entry. So that's our entry. That's our entry. Okay, this is our entry right there. It's our entry point, and then right there, it's this here is our stop loss. Okay, that's our stop loss. Okay, and then obviously the end of that is our take profit. Okay. Okay, that's our take profit right there. Okay, we've done the analysis. Now you see that's a rally. That's the base, and then there's a drop, and then obviously in between there was this huge compression which was happening here. So we use this as our entry point, and then obviously this is our take profits, and then this is our stop loss right there. This is our stop loss, and then that's our take profits. Okay, I'll start another meeting in a few minutes, guys. In the meantime, just prepare some questions. Okay, how many candles should be on the base? Let's try the max. Okay. Okay. I'll control the max. I'll control the max. Okay. I'll control the max. Okay. Okay, guys. I'll start another meeting in a few minutes. So I'll need to mute some of you guys' mics, and then obviously. Okay, I've got some questions as how many candles should be at the rally. And then second clue, what clue was the flag limits for? And okay, cool. Okay, thanks. Guys, you can We're gonna end this meeting and then we're gonna start another one in a few minutes. Okay, just prepare some question for me. Then we can go in terms of how to use the Fibonacci, because I need to show you guys how I use the Fibonacci. For example, some of the trade we had before, like which was, I think we got some really nice trades coming week, like this one. This was a nice trade, like it came straight to this point, like right here, like straight in our point. So this was a nice trade. Okay, this was a nice trade. This was a nice trade. I think that was USD CAD. This was a nice trade. It came straight to this point because it broke the zone. I'm gonna come back to it and test and then drop. Okay, that's a nice trade. But anyway, I want to start another meeting in a few minutes. So yeah, okay. Let me just try that of let's see. Please explain second clue. How many candles should be at the base? Well, and the less candles they are in the base, the more it is stronger. Okay. If there are more candles at the base, that base is not really strong. But if there are few candles, it's a very strong base. Okay, so the flag limit is more likely when the currents or instrument break a certain level. So if it's gonna break a level, more likely you're gonna see that you're gonna see the what I call the flag limits. Okay, so whenever the market break a level, that's what you're gonna see, guys. You're gonna see the flag limits. Okay, you're gonna see the flag limits. Okay, I just wanna see. Okay, I'm trying to get the guys that actually have my mics on, like Amos and Portia, to mute them. Okay. All right. Okay. Obviously, this was another nice trade. As I think we saw it on this was in a daily. I think this was on a daily. Was it daily? I think it was. So as you guys can see, this was a nice clue. The market was dropping, and it dropped heavy right there. So we know ukuthi fanele kubele back la. So more bigger la. This is analysis. This is one of the zero float entry point. Okay, so if you're looking at this, you can see from here to there it's about 80 pips, right? It's a lot of pips if you're gonna use a daily for your entry. Okay, but it's good for direction. Okay, so obviously at the end here, obviously is where you're gonna look for your take profits right there. So your take profits is roughly about over 100 pips, so you can't risk 70 to get hundreds. That's not good risk reward ratio. So what do we do? We go to the smaller time frame. Okay, we look for that. Look, check this, guys. This was nice. This was nice. Okay, this was very good. This was a very nice trade. Okay, so for me, obviously we had the buy from here. I think your screen is paused. Is it paused? Is it? Okay, let me try. Okay. I think you guys can see it now, eh? Okay. I think. Okay. Okay. Wonder why. Okay. But it should be on, must say. Should be on. Frozen. Okay.
Still frozen. Old.
Should be on now. Should be on. Should be on now. I mean, you can't see USD CAD now. USD CAD.
close the order window.
Oh, okay. 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 You know what? Let's just say new share, and then we have that. We have that. We have that. Further. Let's close that. Can you guys see the USD CAD? Can you guys see the USD CAD? Should be there on the screen. Can you see the USD CAD? Okay, we took this one from the daily charts, okay? From the daily charts, obviously. Then we broke it down because this was one of the analysis or one of the zero floats entry, okay? As you guys can see, this did that. When you broke down to the smaller time frame, obviously you can see now you should be floating on nice profit. Obviously, we had a buy here, a nice buy because it broke this level here, and then obviously went on a retest. We sent out a signal for a buy, and our take profits was here and then we had a sell limit here. That sell limit should be floating on about 40 pips, okay? So that's the key thing we should understand is that came back here to retest the zone, and then obviously is dropping again from this zone. So that taken from the higher time frame, which was our daily charts, then breaking down to the smaller time frame, okay? So what we do is, okay, all right, okay, perfect. Okay, happy days, okay? We're just gonna start a new meeting, so you guys can just prepare for some question for about giving us a 5 minutes break. And then we're gonna go into, because I need you guys to understand how do I use the Fibonacci and how to use the Fibonacci along with, because you need to use the Fibonacci along with, use the Fibonacci along with the chart patterns, also along with what I call, what's this thing? Chart patterns, Fibonacci, and understanding the trend, the high low of the trend, okay? Because we need to master those things as traders, but also have discipline in terms of your risk management and also your following the plan, buying at demand, selling at supply. So that's another thing.